Jason, I want to say thank you so much for sitting down and joining me today to talk about financial planning for families.
Yeah, my pleasure. Thanks for having me. I really appreciate it.
And I see like this is your expertise. You're a certified financial planner, and I know you have a book coming out, but I want to talk about kind of your focus first, which is financial independence. I know different financial planners have different specialties and focus. Why did you choose to focus on financial freedom instead of
Sure.
traditional retirement?
Yeah, that's a really good question. So my story begins when I was 13 years old.
Oh,
So I'm Jewish and had a bar mitzvah around that time.
yeah.
And I got some gift money from my parents and my friends and family. And I really wanted to buy a stereo, and it was one of those ones where it was like two cassettes with five carousel CD changer, and that was kind of like the big thing for me. But my parents helped me stay disciplined, and they said if you buy that stereo, then we're going to invest the rest of it. So we created a little investment portfolio, and I love the whole process of investing. And I actually bought my first car with my investment earnings
Ah,
in high school. So around that time, my parents got divorced, and I really wanted to do something with my career that wasn't just, a cog in the wheel, but was
hmm,
making a difference in people's lives. So I wanted to merge money with finance, or finance with helping people, I should say.
yeah.
And that's where financial planning came about. And it's so much more than just numbers. It's really about connecting with people, understanding what the specific goals are and the financial values of that person are, and crafting a financial strategy to help my clients achieve greater financial wealth and their financial dreams and goals and their financial vision for themselves. So that's kind of my story of how I began and where I'm at right now. And my goal is to just help as many people as I can and give them the best opportunity to be the best versions of themselves as they can be going forward.
Well, that's a fantastic goal. I think everybody wants a financial planner that does that,
Yeah,
that has that passion. So
yeah,
I know some couples are at the point where they realize we should at least sit down, kind of like with the doctor, get a checkup, see how we're doing with our finances. And I know it can be a little scary, it can be intimidating and overwhelming. And so you're on the other side of the table as a financial planner. Are there certain questions that couples should present or information they should tell their financial planner to kind of see if they're a good fit?
yeah. That's a really good question. I think one of the biggest questions that I always ask my clients or potential clients as they come in the door is, why are you here? What is it about money that you want to learn more about or you need help with? And so, having an open dialogue of conversation on what is it about finance that you want to get more out of? Is it you're trying to save for a specific goal? Is it you need a financial education and need to learn more about what you're doing? Do you need to help picking investments? What is it about money that is meaningful to you? And then we dive in deeper and we learn more about the specific person's financial values.
Yeah.
Where did they learn about money and what did money mean to them growing up in the household? Was it a scarce mentality or an abundance mentality? And we dive in through a lot of those conversations where a lot of financial planners don't focus on. They focus on, how much life insurance you have, how much you have in your
Yeah.
401k. And for me, it's all about connecting with my audience and my clients and learning about what is it about their lives that they need help with. And a lot of times money can be a facilitator of big dreams and big goals, but it can also be a hindrance. And so depending on how you view money, whether you're feeling that you're far behind because you have debt, or whether you feel like you have some money and just don't know what to do with it. My job is to connect with people and understand where they are in their financial lives and how to get from where they are today to where they want to get to in the future and create that roadmap of success.
That's great. And I know you and I probably are on the same page. Money is not the most important thing, but when you don't have it in check, it can create such a source of stress and frustration, within a relationship, but of course with finances and day-to-day living.
Yeah, absolutely. And I definitely have seen that from personal experience as well as working with clients as well. Yeah, definitely.
Yeah. So I know in the news, this word is thrown around, fiduciary, and
Mhm.
what it means. How
Right.
does this topic? How do you bring that up? First of all, I guess we should define what is asking your financial planner about this. What does that mean?
Sure. So a fiduciary is basically somebody who acts in your best interest at all points in time. And so it could be somebody, if you have dealt with a loved one who passed away. It could just be somebody who is taking over and becoming the point person for money for that loved one's estate. Or when it comes to financial planning, it's about making sure that your financial planner has your best interests at every point in time. There's three different ways that financial advisors work. You can have somebody that is a fiduciary who is giving you advice and charging you a fee for it. You can have somebody who acts as a fiduciary and charges a fee for that advice. And that same person could act as an advisor and shop the marketplace for products and services on your behalf. Or the third option is just somebody who is not a fiduciary and that you don't pay a fee for, but earns a commission for products and services that they place. And there's a spot for each of these advisors and planners, but really, if you want someone to craft an unbiased plan for you that's not tempted to sell you a product or service, then you want to make sure that that planner is a fiduciary, has your best interests at all points in time. And unfortunately for that, you do have to pay a fee for it because that's the fiduciary responsibility, is you are paying a fee to hire that person on your behalf. So yeah, fiduciaries are very important when it comes to money. You want to make sure that it's your money, not just from an advice standpoint, but also money management too. If you have 50,000 or 100,000 or some greater wealth, you want to make sure that that money is managed by a fiduciary. Otherwise, they might have sold you a mutual fund 5 years ago, but it may not be in your best interest or still good for you. And so that fiduciary is now obligated to present to you high quality investment instruments on an ongoing basis, not just at the time that they sold you the mutual fund.
That's a great point. And
Yeah,
I know there are different types of advisors, and we're not saying that people that aren't fiduciary aren't trying to help, but yes,
absolutely.
it's good to know that there is a consequence. If you have a fiduciary, they have to work in your interest. So
Yeah.
now, as an advisor, if someone asked you that, would you feel uncomfortable or would you feel threatened, or is that understood kind of in the industry?
Yeah, not at all. I don't feel threatened by that. In fact, in my first conversation with a potential client our first meeting is all about you. I want to understand your specific situation. And at the end, my goal is to share with you how I can operate on your behalf. And if it makes sense for us to work together, great. If it doesn't, no big deal. But I'm very upfront, even on the first encounter with a potential client on how I get compensated, the different ways that we work with clients, and you're hiring me specifically to be a fiduciary for you if that's what you want, or you're hiring me to not do that if that's just beyond your means to do that. So yes, we have that conversation very upfront early on in our relationship.
Great. So, if you don't mind, I'd love to kind of get into the meat of our conversation, which is,
Sure. Yeah.
planning for financial freedom.
Yeah.
The web has so many people like retire in your 30s, in your 40s, in your 50s. And it's that dream of not necessarily retiring, but having more options. As a
Yeah.
couple, that's my focus, but also with families. How do we figure out a plan that works for us? Now, I know just with one, we can't cover everything in 20 minutes.
Yeah.
And you don't know listeners and readers situations and circumstances. So this is not specific financial advice. This is kind of like, I wanted to get an overview of maybe steps that they should be aware of, like a general plan of how does that process work. Do you mind going over that?
Yeah, my pleasure. So, I want to be respectful of time, obviously. So really the first thing that we do is we figure out, what does financial freedom mean to you? And that means so many different things to so many different people. It could mean I want to play golf all the time and vacation, or it could mean I want to work, but I don't want to have to work. Or it could mean I want to start my own business and open a jazz bar. It could mean a lot of different things. So we start there and we figure out, what is it that you want to get to? And then we figure out where you are today. That's the second step, is figuring out, what are your means today? How far are you to that goal? Are you 10% of the way there, 20% of the way there? How far are you away? And then we figure out how we're going to get there. And we draw that roadmap. And through that process, we identify what's missing. Maybe you started a 401k when you were at your first job and it's still over there, and you've had 2 or 3 jobs since then. Yeah. Maybe you bought a life insurance policy when you were just had your first baby, or maybe your friend got into the industry and you bought a policy from them. So a lot of these financial pieces get jumbled up and we forget that they're all there. And there's no coordinated plan that each of these pieces are talking to each other and are part of a bigger picture. And so really hiring a financial planner can help you take stock of where all these financial pieces are, what everything is worth, how they can integrate together to fulfilling your financial puzzle. And really along the way, you're going to check in and you're going to review the progress towards those goals. And if the market crashes, for example, how far behind are you now? Or maybe you've protected your money so that even in a financial hardship like that, where the markets crash, you're okay. Have you bought enough insurance so that if there's a thunderstorm or a hailstorm and the house gets damaged, or your car gets damaged, or you have a catastrophe, maybe you get disabled, or maybe a parent needs help financially because their health is deteriorating. Maybe your spouse passed away, and there's a lot of moving pieces when those types of things happen. And so when you go through emotional challenges throughout life and on your road to financial success, there's going to be detours, there's going to be potholes. And that's why creating that financial strategy and financial plan will help you stay on track, so that as those things happen, you're moving forward to your vision of financial freedom. So really, that's a quick overview of what we would do is creating that path to success.
Yeah. And I know we can't cover everything. This is high level, but I do appreciate that, because sometimes it seems like it's so overwhelming. There's so much information. That's a good thing, having the information out there, but how do you sort through that? And that kind of leads into my next question is, many people have heard about, okay, make sure you save for IRAs, in your IRAs and your 401ks, try to max those out. But say a couple is doing really well. They want to take advantage of a couple, good years of income. They want to set aside, and they're thinking, if we could retire early, that would be great. Are there places they could invest in outside of those for that period, maybe when they're retiring, until it's time to access them?
Yeah, there's many different types of accounts that you can invest in. And one of the things we talk about is not using retirement accounts as an ATM before retirement, and not using your checking account as a retirement savings vehicle. So you want to make sure that you match your account type with the goal. Yeah. So if you're saving for college, for example, one account type that you might want to use is a 529 college savings plan, because there's some college tax benefits for investing for college. If you're saving for retirement, you might want to use 401ks and IRAs and Roth assets, because there's tax advantages for those goals. But you don't want to be tapping those accounts for different goals. Now, certainly there's hardship opportunities that come into place, but really that's a third or fourth string, or third or fourth I guess, priority that you
Yeah.
would be able to tap into them for. So your primary priority is matching up your goals to your account types. So for people who want to retire earlier than 59 and a half, which is the IRS's age that they denominate, that if you're over 59 and a half, then you can access your retirement accounts penalty free. You might want to try and use some alternative vehicles. So Roth IRAs are really good. Now, if you take out the gains inside a Roth IRA before 59 and a half, then you're taxed. But you can take out anything you put into a Roth IRA before 59 and a half. So for example, let's say between now and 59 and a half, I put in $5,000 a year into a Roth IRA, and I accumulate, let's say, $500,000 in that account or in 30 years. I can access what I put into the Roth before I'm 59 and a half without taxes or penalties. So there's some opportunity there. The other thing that we talk about is brokerage accounts and using just general brokerage accounts and investing in tax managed investments. So while the account type itself may not have tax benefits, the individual investments that you're investing in might be tax managed. So if you're in a high tax bracket, you might want to use municipal bond funds or maybe ETFs, which are like mutual funds, but they're tax managed. So there's a lot of opportunity for tax management inside a brokerage account, even though it's not specifically a tax managed account. And then for some people, it might make sense to invest in cash value life insurance plans. These are plans that they kind of get a bad name because they're often misunderstood. And sometimes they can be expensive, but you want to make sure you design it with a fiduciary helping you design it, because they can be very, very impactful to early retirees' investment portfolio, because you can access a lot of money, potentially tax favorable, when you retire. And even before you retire, you can take it out for anything you want. You just have to make sure they're designed the right way. And you want to make sure that if you don't need or want life insurance, they may not make sense. So really, these are just a variety of different account types that you can look at if you're looking at retiring before 59 and a half.
That's good information. And I think it also highlights the difference it makes to have a professional like yourself to go over these options on an individual basis and talk about, hey, these are our circumstances, these are our goals. Because like you mentioned, there are a lot of options and there's pros and cons to each of them.
Yeah.
So I know one account that people are asking about, at least on my site, is health savings accounts. I know that's on the minds of many couples. For us, it's like we're looking at the rising cost. Is there ways we can save, tax advantages? Could you maybe describe how would that fit in with retirement planning?
Sure. HSAs, or health savings accounts, they're actually kind of a really, really cool investment tool, even though they're not really used traditionally as an investment tool. So HSAs are pretty much the only account that is out there that gives you triple tax benefits. Pre-tax money going in, which means that money you put in, you don't have to pay taxes on. Money that's invested in there grows over time, completely tax deferred, meaning you don't have to get a 1099 each year and pay taxes each year on the growth of the money. And when you take it out in the future for healthcare expenses, there's no taxes that are imposed on that. So if I put let's just say $1,000 a year into an HSA and it's grown to $100,000, I've gotten a tax deduction on my $1,000 that went in. It's grown over time and I haven't paid any taxes on the gains. And when I take that money out, that $100,000 that it's grown to, out for healthcare expenses, there's no taxes on that. So one of the strategies we're talking to our clients about is that you could use that as a retirement savings vehicle and use that as your health account for retirement. So when you retire, you can take all of your expenses out of your 401ks and IRAs, except for healthcare, and use the HSA as just kind of your health pool. So as you have to pay for, health premiums and walkers and wheelchairs, eventually, or prescriptions, you could just tap the HSA for that 30 years or 40 years in the future. So it gives you some really big benefits. And we have some clients that are, believe it or not, maxing it out with $6,600 a year going in, so they can write that off as a family. That's the most you could do. And then over time, just growing that money and going to plan on taking that out for retirement, healthcare in retirement.
That's great and very good to know. I know we're kind of at that stage. We've been paying off debt, and now we're focusing on building more and putting more into retirement and looking at HSAs right now.
Yes.
So I'm always encouraging readers, listeners, subscribers to educate themselves even before they talk to someone like you, financial planning. That way, you're on a similar vocabulary level. You can speak about your goals. Now, you're putting out a book that's coming out very soon that can help couples be empowered and be educated about it. Do you mind talking about that for a little bit?
Sure. Yeah, my pleasure. So the book's coming out March 14th, and it's called The Financial Planning Puzzle, Fitting Your Pieces Together to Create Financial Freedom. So it's all about helping people understand where their financial pieces are, how to fit them together in the right way for them, and really to achieve financial freedom. And one of the terms that I coined in the book is called financial flow. Many people, they hear about the flow state when they're, if you're a professional athlete or in a musician, where you're actually in the zone and you're actually doing everything that you've practiced and you're aware in the moment that you're actually doing it. And so financial flow is all about that, which is taking all of your financial goals, putting them down on paper, creating financial habits, and being mindful and in the moment that you're actually doing the things that you said you were going to do. And you're getting small wins, and you're actually hitting financial goals. And so the book is all about putting it all together and helping the audience just understand where they are today, what they want to get out of life financially, maybe some stumbling blocks that that they can encounter, and how to overcome those and really move forward. And so the book is, like I said, is due out March 14th. So I'm really excited to share it with everybody.
Well, congratulations, because I know that is a lot of work to put together a book and get that out there. So if someone wants to check it out, what are the best ways to get there?
Sure. Yeah. Amazon and bn.com, Barnes & Noble. You can also go to the website, thefinancialplanningpuzzle.com. And there's a little bit more information, and there'll be a link to ways to purchase the book. Along with the book, we are offering a free mini course on how to fit all these pieces together to create financial freedom for yourself. So it's more of an application of the material from the book. So, and that's a free opportunity for your audience as well. And you can go to course.thefinancialplanningpuzzle.com. So you can access it there.
Great. And I'll
Jason
make sure.
Silverberg is a registered representative and investment advisor representative of Securian Financial Services, Inc., member FINRA SIPC. Financial Advantage Associates, Inc. is independently owned and operated. Separate from the financial plan and an advisor's role as a financial planner, he or she may recommend the purchase of a specific investment or insurance products or accounts. These product recommendations are not part of a financial plan, and clients are under no obligation to follow them. Life insurance products contain fees, such as mortality and expense charges, and may contain restrictions, such as a surrender period. Financial advisors do not provide specific tax or legal advice, and this information should not be considered as such. You should always consult your tax or legal advisor regarding your own specific tax or legal situation.